understanding that we are still moving down on Bitcoin is crucial. So let's talk about what this top side looks like. We kind of talked about the bottom side and some expectations and why we have this line here. And maybe we'll change this one a different color because this is like our expectation, right? Like this is what we would expect in the move. So, maybe do something like this and we can turn it like a nice pink color right there and we'll make it a little thicker. That could potentially be a target in the future for, if we start to lose this part of the move and we start to backtest trend and break it down, that would be, like a very relevant spot to go after. For now, we're still holding the move up, but in the future, this might be something that we see. I guess we're gonna just wait and see how things go over the next couple months with Bitcoin here. So, yeah, okay. What does this give us? This gives us the target on the bottom. This gives us an expectation that we have a trend that we simply need to break here, right? So we have this trend here that we need to break, right? So over time, we are going to see that if we can get on top of this trend here, we might be able to do something like this and go up to the leg of the move here, which at that point, if we do go here, this is going to be the same kind of moment in time and event, right? So we're going to take this pink line and we're going to put an expectation up top here. So we kind of have the two extremes of the move, right? We have kind of the break on the top and what can support the bottom. So this would be kind of your maximum range in Bitcoin, like even just based on these few lines that we've drawn. We can take away all these fancy arrows here and we can take away this. And now we've just expanded the meta of our market a little wider, right? Now we've just expanded what our expectations can be even wider. So we kind of have this bottom of the move that will be a target in the future. And, like the greatest knife catch Bitcoin has ever had, I suppose, or this was quite a move down here. This was quite a fantastic move that happened from here. This will be another fantastic move. I could see us dropping from 7,000 all the way down to there. And it might happen. We'll see. But, in that moment, we might use 2,600 to actually break this trend up, right? We might actually use this to break this thing up. Our top has the 16,281. This level here is what will potentially break this thing to move up in the future above the height of the move that it had here at $20,000. Whatever this height was here. This is the level that you need to touch to get there. And we can simply see this just by a few lines on our chart. We can simply see the next major untested range of this move. If we break down, we can see the top, what we have to target. And we really haven't done any work on our chart in terms of, let's look at what's happening inside the moment here. And, this represents a couple months of action, just these few bodies of candles here from, January or December here. Where this green line starts to here is already, going on 4 months of, or three months of movement in our charts, right? So without even looking at the inside of our chart here and the more in-depth stuff that helps us trade every day, we can't use this type of market meta and what we are building here, long-term expectation. We cannot use this to justify trades in the immediate. Rather, what we can do is we can use this to understand what the potential parts of these moves are so that it helps us understand what the architecture is being developed in this moment here, inside of these candles here. It helps us understand what the potential outcomes could be so that we can act appropriately. So if we're shown a reason that we're going to 6,281 and 99 cents here, we would know how to react to it in this moment and we would know where our end target is, right? So I've drawn only two trends. I've really only drawn two important levels here. This one doesn't give me that. This one doesn't give me that. Really, this level here and this level here gives me an inner Pandora's box, right? Which is that this one is completely irrelevant. This is just kind of a point right here that helps justify the move. And this one is what's happening right now. The inverse that's looking to have a reactionary pullback off of this right now, right? So this is the exact kind of pieces of the move. And it's quite possible that we do come up to here. It's this 9,000 range before we have a major pullback, right? Like that would test that range and then have another major pullback. So it is very, very possible that does happen. Now, is it going to happen? Well, we've got to wait and see. It could just pull straight back off this level. I don't think it's that likely that we pull back off this level, but we could have some kind of little small pullback and create our own little Pandora's box from here to here, some kind of range inside of here, and that's fine. But again, simply just drawing these few lines allows me to probably, if I was writing about this, I would have at least half of my meta report done. So 500 out of 1,000 words to understand the greater grasp of what's happening with Bitcoin here. So like there is no let's just go straight up to the moon here, right? There is no let's go straight up to the moon. We have a long-term trend that we need to break in terms of looking to have those bigger moves up. This is simply compressing us. And I always do this with people and show them this chart, right? Like, you always flip your charts if you're not quite sure what's going on, or if you're visually confused. You always flip your chart and say, oh, this is a hold level that's going to break this move up. And if we can't break this move up through this trend here, we're simply going to hit this moment trend and fall down completely, right? So we'll just fall through trend and we'll just fade away into the dark because we just couldn't hold our move up. So you have two options here. You either hit a hold level here, right? You hit, that's supposed to be an H. It's not a very good one. Let's try to redo that. You have two options here. You either hit this, I'm going to do it like this, maybe one. Yeah, you have an H right here, a hold level. That could potentially be moving this up to a higher range, right? A higher target. Maybe it's targeting the break of a move or a leg or something like that. Or you simply fail to hold this level. You continue to hold it until you break trend and then you kind of dump this way, right? And if you were to turn this chart around, this is exactly what would happen in this move, right? You would ride this range until you break this trend, and then you would take your move up to 16,000. But if you can't get over top of this hold level, you're simply going to break this trend that you have supporting the move and go after your next hold level or your next hold level in here. So very quite simply, a few lines here and just some visual fidelity, and we can see exactly what's happening long-term with Bitcoin. So this is the power of the meta of the market, is it gives you a very specific criteria to look for. We know that you have kind of these hold levels here, and you have these hold levels here, and you have something that's holding the move up, and we know the reactionary indifference between moving up and down, right? We know what to expect when these events happen long-term, because we've defined exactly what could happen in the interim, right? We've created all of the long-term broad expectations so that when we come to these very important moments like this, where you had hit this level here and it's like, oh, we should short this level, you get one chance, probably a 1 minute candle, to get into this short and make your $100,000 or $200,000 or whatever you could have made off this trade. Like, if you were on 100x and you were right here, and even if you took the first part of this move down or the second part of this move down here, I'm not sure. Whatever you decided was good for you, we'll just go here. This is fine. Or even if you just go to this candle here, just, you're in this trade for 2 weeks and 34%. 34% at 100x is a lot of money. That's 3,400%. So if you had $1,000 on this, you'd make $34,000 profit. If you had 2,000, you'd be at $74,000 of profit. If you had 100,000 at 50x, or maybe not even, maybe let's just say 10,000 at 50x, what would you be at? 34%. So that would be 17% at 10 grand. You'd be at $170,000, right? So, there's these very important moments that happen in our chart, and we have to have very specific reactions to them. Very important. Again, right here, you could have had the same thing. You could have had the next round right here against this hold level. And if we can measure, let's try that again. Measure this one. You're probably going to have very much the same thing, 30 to 50%, something like that. Yeah, you have that same 30% here. Then you would have had another hold level rate that you could have done the same thing off of, right? You would have had this one. You could have done it twice. You make 30%, 30%. And you're only talking about a few trades to make $1 million. But that's kind of a skewed result. Like, oh, we can make $1 million just off a few trades. But actually, it's possible. So there are people inside the community who have done big 6-figure paydays off some of these trades like this. So it's not impossible. It definitely happens. Then you have another 30% there. The same level gets hit here. So you reshort it again. And, you're talking about 4 trades, and you're talking about, life-changing money here. So yeah, the meta of the market is important for this reason, because it gives us very defined, crucial moments that will show us, hey, this is where we should be taking larger positions, bigger moves. And this is, just talking about this simple section from here to here, we have, again, only put a few lines on our chart, but we have a great understanding of what is happening. We could have probably filled up 500 to 800 words just from a very basic and generic outlook of what 2 potential targets could be. So now we have 16,281 and 2636. We have the trends that will take us to those two targets if we break them, right? So my expectation would be like this. We break this trend, we're going here. We break this trend, we're going here, right? So you have two trends to break, and you know kind of the reactionary points. That doesn't mean you might make it all the way up here, right? But if you're taking the trade here and you come up to some, midpoint here because of some other reason, something that's happening in here, that's still a fantastic trade. You're still, a 400% trade from this point, or 100% trade. Sorry, I was looking at the bottom prices here. You're still at 100% from here to here, right? So you have to make that decision in the trade of what makes sense, where your final target is. But we have two defining factors, right? We have two kind of key reactions. We have reaction 1, we move up. Reaction 2, we move down. And again, we only drew a few lines to get this information. So now we know how powerful this can start to be. So that would be my initial thoughts on just drawing a few lines, looking at this, not working anything past this moment here. I'm even going to delete this one because this is kind of useless information right now. Not working anything past that point, just looking at a few lines and what it means for the state of the market and where this thing could potentially go based on that. Very powerful, right? So I think that's a really good start for people to understand the meta of the market. From that point forward, you have to start breaking down the smaller time frame. So let's talk about, kind of the steps you would take next. Let's build this to be usable for people watching this video. So the next step in understanding the meta of the market would be obviously completing we looked at this piece right here, obviously completing the expectations and the guidelines of what could potentially be here. So the current time frame and so forth in the future as this thing evolves up or down, right? As it evolves up or as it evolves down, we have to continue building out these guidelines for what can potentially happen, because it gives us the right reactionary moments where we can see large trades like this, right? So I completed kind of this piece for us right here in the yellow, and you guys will need to work forward from that piece there, right? You can elaborate on this. There sure is a lot more that's happening in here. And the more you know, the better equipped you are and the more power you have to make these trades. So that there certainly is more work you could do in this field right here. However, this is just a very, very good general start as to what I would see as a basic meta report. Quite a bit more is happening. But again, that's the work I want you guys to do, not me to give you all the answers, right? So the next step for everybody listening or everybody in this video is to fill in the architecture on, let's first start talking about this time frame, the weekly time frame. To fill in the architecture that is here, the stuff that we didn't look at and the stuff that we didn't tackle. That's important. And I guess it would have been maybe a little over this as a range, because we kind of did that one. So I'm just going to slide this over here. Something like that, right? We kind of did this point here. Something like this. You guys need to do that. Now let's talk about what time frame to use. We don't use the monthly time frames in Bitcoin because there simply isn't enough time yet in the charts to see some of these levels, right? You won't be able to have relevant levels like this, for example, would be a relevant level in the future. Now, I don't know if we come down here. We might come all the way down to $1,300 Bitcoin again one day. This could potentially take 10 years to come down to 1,300 if our charts are continuously compressing over the next 10 years. We simply don't have enough time on these charts yet to have developed technical analysis to use a monthly time frame. There might be a reaction point or two in here that coincides, but it's also going to be a different level on a different time frame. So the monthly time frame just isn't anything that we use, for the simple fact there's just not enough candles to give us usable information. So we stick to the weekly timeframes. If you're charting gold or the Dow, you can use 12-month. If you're charting crude oil or some of these trends some of these stocks that have been around for forever, sure, the monthly and the 12-month are used, but just not in crypto because it's too new. It's only been here for a few years, right? We only have data back from 2017 to current, right? So we only have 3 to 4 years of data here. There's nothing else here to have data on. So we can't use, if we were using monthly candles, we'd have 36 candles if it was 3 years. We can't use that. It's simply not enough, right? So first thing you do, fill in the criteria on the weekly timeframes, because there's a lot of architecture in here that you still need to do. There's a lot of work that still needs to be done. There's a lot of understanding of what was hit, what could potentially be hit, et cetera, et cetera. Then you're going to want to go into smaller time frames. So then you're going to want to go into your much smaller time frames. And the smaller the time frame you're going, the greater the work you have to do. So this becomes a lot of work on a daily time frame, as to where it might have looked very easy on a weekly time frame, and the weekly time frame can give you some guidelines. The daily time frame in here is what can give you a little bit more of a completed picture, right? And then even past that, the 4-hour charts can give you even more of a completed picture. The problem is that the deeper you go, the more work you have to do. But that's not a bad thing. That's something that will give you more power in your trades, right? Like, for example, if we were to go into here, use some butterfly effect magic, we would go into here. We could simply take this replayer tool, go like this, go to some deeper time frames, and start redefining this level quite nicely. And you'd have a point here, which ends up, for other reasons, coming back to this right here. And then, so if you were on the hourly, you could even refine this further to find the exact point, and you'd be right here, this white candle right here. Again, not something we're covering in this lesson, but if we go see the relevance of that, we need to turn this replayer tool off and see what happened. You find your exact moment where this was targeting. And again, this is outside of the scope of Blueprint. This is more butterfly effect stuff. Don't start looking for the tops of white candles on hold levels. That's suicide if you're doing that. There's a very specific reason why this candle was, and this is not even a hold level. It's a different type of level altogether. It's not a hold level. It's not a break level. It's some type of level that I've never talked about. So, but then again, it gives you the exact moment that you would have looked in here. The point being, the deeper you go, the more technical prowess you'll have, and the more exactness you'll have in these moments, right? The more exactly what this did here, and where it held this level. So this was the proper short. And again, this is something that outside of the scope of this, but the point for this video is the deeper in time frames you go, the more work you're going to have to do. However, the longer it's going to take you. So you would start with a weekly, fill in the architecture of the meta report here, and again, write about it, because your thoughts on paper mean that you can go back and read what you were thinking and say, wow, I was right, or wow, I was really far off on that one. It gives you a baseline to work off of, because this is a living, breathing document that we constantly update. We are never just creating it once and walking away from it. This is something that, as a professional day trader, as somebody who's a professional in this field, this is your homework, right? Like this is your clients, for example. Like if you were an accountant and you had clients, or if you were a lawyer and you had clients, this is your clients. Your meta report is your living and breathing document that you have to do your due diligence work towards, to constantly keep your clients happy so that you can always make money, right? Think of it in the same light. This is your documentation that will forever give you a guiding light. It should be your compass, your northern star. This should be everything that you do. You should always have a meta report. It's good practice to write it out. So that's why I make my students do it. And then it goes much deeper. Like the meta report actually becomes the very first training step. It's almost like the training wheels to the very highly advanced technicals that are, the butterfly effect technicals, the next level of technicals. This is the training wheels to understanding a larger amount of information. Just like if you were to say, oh, what are hold and break levels? You would never understand that if you didn't understand valleys and wedges and trend lines. You wouldn't even be able to keep up with hold and break levels, because you'd have 1,000 missing pieces. So your meta report is the same thing. It's the understanding of a deeper set of knowledge, and it's your training wheels. So it is that crucial, and it is that important, that if you ever want to take a step further in this day trading thing and your career to the next level, this is something you have to take seriously. You do 1,000 words as round 2. Okay, so let's talk about where it goes from there. We're going to stop at the daily time frame for a second and come back to that. After the first round of 1,000 words, I make my students, I read it with them. I grade them on it. I grade very tough, like it's an 80% passing mark. If they don't reach 80%, they simply have an auto fail. If they don't reach 1,000 words, I also auto fail them. So I'm pretty strict on what I expect. And then if they can't complete that, they basically lose a week of work and redo it over again. So make sure you include a lot of words. Make sure that your thoughts are concise, easy to read, and properly communicated. So we go through it and then I help them refine it. So I gave you guys that point of refinement today. So what I first started here in the beginning of the lesson, going through the very generic, broad outline of what Bitcoin's outcomes are, that's kind of the refinement that we talk about, except I refine their entire meta report. I don't just refine one point and I don't just give them the pieces, but that's what I do. I look to go inside of their meta report and pick apart every single decision they're communicating and say, okay, is this correct? Is this incorrect? Let's elaborate on that and let's really make more sense out of it to make sure it's right or wrong. Because we can mark levels, we can have assumptions, we can have opinions everywhere we like. But simply put, if they're wrong, it costs us money. It's hard to be right. But when you're right, you get perfect knife catches, you get perfect entries, you get perfect exits, you make tens and hundreds of thousands of dollars every couple months. It's the reward is in your work, right? So our reward is our finances for all our hard work, right? As it should be. So round 2, I refine the report for them. Round 3, I make them, after they've done it a few times and refined their own first 1,000 words, I make them bump it up to 1,500 words because I say, okay, this is a great start, but we need to see more. I need you to elaborate more on this. So that's where we go into deeper timeframes, which kind of leads me to where I am now. So then we go into deeper timeframes. So you go into the daily, you go into the 12-hour, you go into the 4-hour, you go into the 1-hour, 15-minute. And the deeper the time frame you get, the more information you're unveiling about the charts, right? So if you were to say, let's do this, let's go to a 4-hour chart for a second. We're on the daily. That's not really going to give us information usable today. We're on the 4-hour charts. This would have been a great target, a great long-term target, and we hit our target, and that's perfect, right? Okay, that's fantastic. And we can say on the 4-hour charts, I'm just going to use one level here. I'm going to give you guys one target, one level. Yeah, okay, we have a 4-hour valley right here. We have a hold level. Yeah, this looks like a great place to put a target. So just by doing a little bit of work here initially, we have an incredible rebuy opportunity at 69.12, right? We have an incredible rebuy opportunity at 69.12. You front run it by $1 or $2 and you go 69.13 or 14 or 15. You guys have to make that decision on your own. I can't tell you where to buy, but you have an incredible hold level here, 4-hour hold level, and then we can go and make sure there's nothing on the 12-hour, which I don't think there was. Oh, it's actually a 12-hour hold level too. And you have another one even back here up at 70, whatever this is, 70.35 or 70.10 or something here. But really, I'm just going to focus on this one right here. So then you can go in here and you can, further refine it down to the hourly time frames, and you can say, oh, that's a really great hold level. Like this makes sense. And then you can see the 12-hour here, for example. You have another one right here, right? You have one right here, and that's fine. That's not being used anymore, and you have one right here, right? So you have these kind of a few levels. Really, I just want to focus on this one because it is a bit of a greedier target, and I'm all for the greedy targets, right? So you do have some great expectations here of what to look for next, just like you would have down here. So as you're in this trade, in this moment, the further you go down, the further you will find more local things to trade, right? We create the bigger breach on the weeklies, on the dailies to give us some of these bigger reaction points. But then we also have kind of the immediate meta of the market, what's happening, because this meta of the market, this is a snapshot of long-term, which is what I gave you today. My long-term snapshot in one very basic way. There's a lot of advanced pieces that I didn't include, but I gave you a long-term snapshot of what's happening here, right? What if we're not trading long-term? These are great points to take a couple times a year, and then they garnish great wages, and that's fine, and great returns. But what if we want to trade every single day? Well, we can't trade every single day based on these larger timeframes. We have to actually go and develop our meta of the market in deeper timeframes in the moment, right? So we need to start going down into timeframes to develop these expectations of the meta of the market so that we can say, oh, we're trading today. What would we look for today, for example? So the more immediate we're looking to trade, the more immediate we can start to mark some of these levels. And even I can see right here, oh, this would have been a great buy spot right here because this is probably a smaller hold level in here. There's probably some kind of hold level right here that would have been a really nice buy spot, right? So you would have had, there's your hold level right, come on, right there, right? I don't see any other two candles. You have this one right here. That's fine. So we can use 7108. Look at that. We had a great buying spot. And so we can go here and look and even say, this kind of starts the move right here. So this kind of starts the move up. So we have to basically just find the hold levels that are inside of here. Maybe we'll start with a 5-minute and see. Okay, so there's actually a stronger level right here, a 5-minute right there. maybe even go down to, and we're going to put the replayer tool on here so we don't have to keep scrolling through. Maybe even go down to a small time frame here, see that we have right there, and even go to a more smaller time frame here and see where it exists. And you have an untested hold level right here. So you have this right here. It's kind of your untested hold level. You don't have anything back here. So now we can take this replayer tool off. And if we were wanting to trade today, this is the kind of market meta that we would need to know. We would need to know, hey, we are trading today. Well, what happened here? What happened to the charts? Trading view, hello? Oh, that's weird. It completely broke my level. I guess we have to redo this one, right? Let's go to a larger time frame. There's something's going on here with trading view. Oh, right. We were looking in here, I think, right here, right? 7,100. And we were looking right there. Maybe we went back. Yeah, that's where we were. That's right. Because we used the replayer tool and we were assuming that we were right here in the moment. We were assuming we were kind of like right here in the moment. This is okay. That's my mistake. I shouldn't have exited the replayer tool. Confused me. Not a hard thing to do. Confuse me. So we would go in here and you can see that there's like a little, whatever 1 minute hold in there. This is kind of like, market meta. What would you expect for a rebuy? And that kind of, here's that hourly hold level that we had found. So, right, this is, let's just go back and look at that for a second. That's that 4-hour hold level, right? And then you're starting to break this move down. And here's a new leg of the move right here. This starting right here is like the new leg of a move. So it has, this section right here that you're reacting to. And we go down and break it down into these moments and just verify that this level is correct here. Right? This should be that kind of pretty extreme hold level, right? Again, it was actually tested right there to perfection, the 1 minute hold. Then, we go here and maybe we can hit play and see how it, maybe we might want to look for one that's a bit lower since this was already tested. So we can say right here, right? There's another hold level right there on an even smaller time frame. Go to 5-minute charts. Come on. Because that's a tested level. So you can safely say that you might go after, a new untested level. But not something, again, outside of the scope of this lesson, but, there's another thing going on there. And, there's a perfect entry right there, right? So, stop. So then if you wanted to take trades today, you'd have your own inner meta of the market that you're developing in the day, in the moment. And you found the perfect level to enter your trade and in the next spot here. And then what do you have here? You have 200% move. So 200%, that's quite good, actually. That's very good to have, this here to this here. And then, you'd have your own market analysis, a hold level here that you would be targeting. And we can even go onto some of these bigger time frames and see if the bigger the time frame, the stronger it's going to be held, right? So you'd kind of you move up here and you start these inverse levels here. So you can kind of start here, right? And say, what do I expect it to hit? And look for the 15-minute valley. You have it there. You have a 15-minute valley that starts here, right? That kind of starts this move up. So you do have kind of almost this perfect trade scenario where understanding the meta of what is happening today might be different than the overall. Overall, it kind of looks like we're still moving down. Now, we might start holding ranges and moving up, but overall, we're still moving down. So for the past how many days we've been moving up, right? So let's look at that. So the meta of the market is since March 16th. Oh, wait a second. We're way off base here. That's way too long ago. So even, okay, what's the date today? April 12th. So for the past week, so from April 5th, we've moved up from here to here and we've had a 10% move up, but that doesn't mean the meta today is showing us a pull back, which could be potentially laddering from here. Eventually we'll hit this hold level here, which is going to ladder right here. But we have to stop off here first. So we understand this, right? We understand that we are still in kind of a local move up from $3,000. We're still seeing the height we can go to. But inside that height, you're going to have constant moves up and down. So the further in time frames you go, the more you can develop these expectations and find the correct levels to buy. And then you can get like 200% trades like this, right? And then this is a trade that I took on stream last night. So, that was something I took on stream. And then it went up to, I believe this was last night. No, that wasn't last night. It was a different trade, but it was, pretty close to this level. Yeah, I'm sure it was in here somewhere. Maybe I took something like this. Yeah, see how I already kind of just the visual fidelity of the charts, right? Like, oh, you see, perfect. See, we built our expectation and it hit our level perfectly. And then even further, once this breaks, you'd probably have this one right here, right? You'd probably have something like this, which goes after and moves up off of that, right? That goes after the next level down here. There's a little 2 candle right there, which it goes after, and so forth and so forth. So you can see where, understanding the local pieces of the move, you're developing that expectation, those targets, right? So this is important to do always. Go to the hourly piece of this move and see where this thing goes. And it goes straight up. Quite simply, probably just went after your hold level up top here, right? Like you probably just went after, I guess we have to go to the biggest time frame first here and see. Oops, delete that. Go here, and you've got your 4-hour level there, which doesn't have an hourly. The 15-minute rate here, right? So you're very much, and you've already actually tested this on that side. So for different reasons, it would be this that you're going after, right? Which is actually exactly what you went after. So meta market is quite crucial in what we do. Long term, short term, it is our guiding light for every trade we take. It is our Achilles heel for if we are failing, it's going to be because we're not understanding the overall direction of the market. We need to know if we're going up today or down today. We need to know which direction to trade, why, our targets, all of that stuff. And this is the segmentation into the larger and the gateway into the larger parts of technical analysis and trading. So, whenever I teach, again, just going over this one last time, whenever I teach my mentoring students, I take them into mentorship. This is the very first thing, week 1, what I show them how to do. And they're kind of like, they're like deers in headlights. They don't know what to expect, what to do, but I make them do it anyways. And I say, okay, it's important because we need to understand how to put the training wheels on to start getting into the bigger league, right? So you can see doing the meta of the market, something that is your training wheels for the larger information to come. Hey, everybody. Talk soon.